Hi, I'm Shae Russell from ABC Bullion, and joining me today is Andrew Naylor from the World Gold Council. Andrew, how are you today?
Thanks, Shae. Very well, and thank you for having me on. It's delighted to speak to you.
Look, I'm delighted to speak to you because I believe we've got a fantastic show lined up for everybody today. Now, I understand we are nearly 2 months into 2022. First and foremost, I'd actually like to recap 2021. Last year was very much a return to normal after 2020 disrupted both markets and supply chains. Now, what were some major trends the World Gold Council saw develop during 2021?
It's a very interesting question because the comparison between 2020 and 2021 is quite stark. It's almost a reversal, if you like. Looking back to 2020, we saw record inflows into gold-backed ETFs. We saw a record high gold price. Institutional investment was up, but consumer demand for gold, that was down. So bar and coin demand, jewelry demand, that was down pretty much across the world. And that was because of the economic uncertainty that COVID brought about in 2020, but also because of the lockdowns in major gold-consuming markets. But going back to the question about 2021, it was the opposite. So gold demand overall, that was up 10%. And that was primarily because of consumer demand, which really recovered in most major markets. So bar and coin demand, that was up by 31%. Jewelry fabrication was up by 57%. India and China, which are the two largest consuming markets for gold, consumer demand was up there. And that was because of, again, it's a COVID story. Countries have emerged from lockdowns, economic sentiment had improved, and that encouraged gold consumption. We saw central banks buying gold as well, taking inflows into central banks to the highest in 30 years. And so that area of demand as well was robust. Finally, two more points. Tech demand, which is linked to consumption, of course, that was also up. Gold is used in many high-end electronics, in the semiconductor industry, in the medical device industry, even in the space industry, especially where safety is paramount because of gold's unique lack of corrosive properties. It's used often in technologies where safety is absolutely important. So we saw demand from that sector picked up. The area of demand, though, that didn't, and this is where we've got this sort of almost role reversal, if you like, was institutional investment. Putting central banks aside, commercial institutional investors, we did see some outflows from ETFs in 2021. But let's not forget, in 2020, we saw record inflows into ETFs, so coming from a very, very high base. But I think the bigger driver for institutional investors was one, a concern about the interest rate environment. And I'm sure we'll talk about that in a bit more detail later on. So that was impacting institutional interest in gold. Plus, because economies have opened up, economic sentiment had improved. Institutional investors, they were taking on more riskier assets. We saw huge interest in equity markets, for example, that rebounded. So it's a mixed picture, but overall demand was up 10%. The price last year was down by 4%. But actually what's important to look at is not the overall, the high and low price, it's the average price. And if you look at the monthly average price of gold throughout 2021, that was actually up by 2%.
Look, that's comparing 2020 and 2021 is a little bit like comparing chalk and cheese when you lay it out like that. So I'm very interested to hear what sort of developments and demand and supply factors you see developing during 2022.
That's interesting. Yeah, I mean, I didn't talk about supply in 2021, but supply, so mine supply was up modestly, but we saw a reduction in recycling. And that's primarily because of the price. When the price is lower, consumers tend to hold on to their gold for longer. When the price is high, like we saw in 2020, that's when consumers, and in certain markets, it's more apparent. So I'm based in Singapore, and if you look at Thailand, which is a major consuming market, it's quite interesting because consumers in Thailand tend to sell more quickly when the price is high. They like to bank in those profits. So that means when consumers are selling, recycling goes up. But turning to 2022, there are two areas to look at. One is consumer demand, bar, coin, jewelry. We'd expect that to continue. The fact that really underpins that sector of demand is economic sentiment and economic growth. Growth forecasts are up across the board, and we'd expect that to be reflected in healthy consumer demand figures. Institutional investment, though, this is going to be a tug of war between the interest rate environment and inflation. And so we'll see a little bit of uncertainty from institutional investment. I mean, so far this year, it's been fairly positive. I think what's at the top of mind now is inflation. And we've looked at inflation in quite a lot of detail. So there's some World Gold Council research where we looked at gold's performance as a potential hedge against inflation. It's not the only hedge against inflation, but it's a potential hedge against inflation. And when you have a low inflation environment, so when inflation is 3% or less, you see that gold produces returns on average, on an annual average basis since data began, which is about 1971. But if you look at it from 1971, the average annual return for gold in a low inflation environment is around about 7%. And then in a high inflation environment, so when inflation is above 3%, the average annual return for gold is closer to 13%. So the figures do historically suggest that gold can outperform inflation, and it's long been recognized as an inflation hedge. And so when inflation continues to be at the forefront of investors' minds, we'd expect that to impact institutional interest in gold.
So where you've actually just left that question is a wonderful lead into my next question. And this is about gold being an old and a historic asset, and it has a multi-millennia connection as money, which is obviously part of its appeal for investors around the world. However, society is rapidly developing in the 21st century. And what I want to know is, what are some forward-looking projects that the World Council is working on?
It's a good question. One of the biggest appeals for gold, certainly for consumers, is it's a physical asset. You can take it home or you can have it stored on your behalf, but when it's allocated to you, there's no credit risk. There's that sense of security that you get in holding gold, and that will endure. But what is changing, though, is preferences for how people transact in financial markets. And the gold market isn't immune from that. And what I mean is, we need to think about digitization. So you've still got a physical asset, but you digitize how people access that asset. So you can invest in gold through an app, for example, or an online account. And I think people are increasingly savvy. Digitization allows price comparisons, for example, and ultimately that's to the benefit of the consumer. But there are other areas that the World Gold Council is specifically looking at to make sure that gold, one, remains relevant in the 21st century financial system, but also it means that it remains a trusted asset for consumers. So on the trust piece, we're doing a number of things. The most significant of which at the moment is the retail gold investment principles. And this is something we're going to be looking to launch in Australia. But it's a set of principles for product providers that outlines best practice when it comes to developing gold products, particularly managed gold products. And accompanying that is the retail gold investor guidance, which is guidance for individuals, for consumers. It's a set of questions that they should be asking of product providers so that they're comfortable that the product that they are looking at is right for their financial needs. And ultimately, we hope that this builds trust in the gold market. And through building trust, you make gold more attractive and hopefully attract more consumers to gold. The other thing that we're looking at, though, and this is something that we've done for a long time on the institutional side, is making the case for gold, helping people understand why a strategic allocation for gold might make sense, help people understand the financial role that gold plays in investment portfolio. So we continue to make the case, and we have various different research reports looking at how gold would perform in certain economies and in certain investment landscapes. We have various different tools, a portfolio optimization tool. We have something called Quorum, which is a valuation tool, which helps investors, both institutions and individuals, understand the different factors that can impact the gold's performance and help people sort of navigate that landscape. So the education piece is important. And then linked to the education piece as well is a project that we're working on to develop a professional development curriculum for gold, which is something that we're developing here in Singapore, but it has global applicability, and we'll be looking at launching it and running training programs in Australia, hopefully later this year. But this is a curriculum that brings together all of our material on the investment case for gold, all of the different standards that exist out there in the market, some of which are ours, but there are other industry standards that are important, and understanding or material that looks at the different roles in the supply chain for gold, for example, bringing all of that together into a single curriculum for practitioners in the gold market to help raise standards, but to help practitioners understand the contemporary drivers of gold demand and the contemporary role that gold can play, not just in investment portfolios, but in the economy more broadly. So those are just a few of the things that we're looking at. One, to increase trust. Two, to increase standards. And three, to increase knowledge so that people understand the role that gold continues to play.
There's some sounds like some fantastic initiatives in there, and I look forward to seeing more of them in the future. But you use a couple of great phrases in there, and I'd just like to use that to shape my next question, which is you use the words contemporary and making the case for gold. Now, while I'm aware that many cultures pass on the connection between gold as an enduring wealth preservation asset to their children, younger and tech savvier, well, I'd say kids of today, but we're really probably talking sub 35, aren't we? Are at risk of shunning a traditional asset like gold. So what I would like to know is what are the World Gold Council, what are they working on to help a younger generation understand the importance of gold?
There are two things that we're doing. So one is, and they're two slightly different angles. So the first is we undertake a lot of consumer research in many markets, major gold markets around the world, to help the industry, to help people who are selling gold or developing gold products understand consumer preferences. And a lot of that research, yes, it's looking at a nationally representative sample of gold buyers and potential gold buyers, but we do a deep dive into younger generations, millennials, and the generations that have come after millennials to look at, one, their perceptions of gold and whether there's a difference between how they perceive it and how previous generations perceived it. Two, what they use gold for and what are the motivations for buying. Is it as an inflation hedge? Is it for financial security? Is it to mitigate against geopolitical or economic risk? What is it? What are the reasons why younger generations are buying gold? And then the third area that we're looking at is how do they buy gold and through which channels? And actually, that's the most important bit in my mind to making sure that gold remains relevant for younger generations. It's not just about now going to a gold shop, a bullion dealer, buying a bar and a coin or a piece of gold jewelry. It's about being able to transact online, but knowing that the gold that you're buying is physically there and physically present somewhere and is allocated to you. So so that's one thing that we're doing, which is helping product providers and the industry understand perceptions so that they can develop products and marketing campaigns that attract younger generations. Linked to that, we're encouraging innovation in the gold market. Something that I'm working on at the moment is some thought leadership about gold's role in financial inclusion. So this is primarily targeted at emerging markets where there's established gold demand, but linked to that is how technology is actually enabling further access to gold. And it's clear that apps, online gold channels, products like that are hugely important to capture and retain young people's interests in gold. The third area that we're looking at, and it often comes up, is is cryptocurrency the new gold? Well, for us, surprise, surprise, no. We think that cryptocurrency isn't the new gold, but we recognize that cryptocurrencies or crypto assets are playing a role in finance. We recognize that, but they're fundamentally different assets. And all you need to look at is demand to really understand why. Gold, you have central bank demand, it's a reserve asset. You have physical demand from the technology sector, which is around about 7% of demand. Jewelry demand, huge amount of demand, and investment demand. So you have this very, very diverse nature of demand for gold. For crypto, it's very different. It's speculative. It's not a reserve asset, far from it. You can't do anything with it physically. It's a speculative asset. And it's not without risk as well. We've seen quite significant volatility in the cryptocurrency markets, but there's also other risks as well that are emerging. Regulatory risk is one. The regulatory regime for crypto isn't yet settled. We don't really know how regulators are going to finally treat cryptocurrencies. And then secondly, there's the fiscal risk. You've got some markets. So for example, a couple of weeks ago, India announced a capital gains tax on returns from cryptocurrencies. South Korea has been toying with the idea. So there's fiscal risk as well as the market risk, as well as the regulatory risk. So what I would say is to anybody, not just young people, but anybody who is investing in cryptocurrencies, it's not without risk. And if you want to mitigate some of that risk, you might want to think about gold because that can increase your risk-adjusted returns, and it can help offset some of the risk that you may be loading up on through an investment in crypto assets.
Now, while we are a global bullion channel, I do want to bring this topic back to Australia just for one moment. Now, the World Gold Council recently wrote an article about Australia's pension system, which we call the superannuation scheme here. Tell me, what prompted the World Gold Council to recognise and even make the case for a strategic assessment ownership of gold?
There are a couple of things. I mean, Australia is a huge market. I mean, it's a world leader when it comes to the superannuation system. So there's a very large pool of assets in Australia. Australia is slightly different because of its role as a major gold producer. It's the third largest producer in the world, and that does impact investment portfolios here, the typical construction of investment portfolio, and it changes sort of the optimal allocation for gold a bit. But we wanted to explore really what is the investment case in a typical Australian dollar portfolio. And we found many of the same findings when you look at a US dollar portfolio, euro, or a sterling or a yen portfolio, or a Sing dollar portfolio. The fundamental reasons for an allocation to gold, physical gold, remain. The second area to think about is the distinction between self-managed superannuation accounts, where individuals can, they're free to invest in gold as much as they like. And so there's clearly an education piece for us when we're thinking about targeting individuals and self-managed accounts. But when it comes to managed accounts, the superannuation, the super funds, there are a number of things to look at. And what we found recently is that many of the super funds are moving or are more equity heavy than perhaps other funds out there. It's partly because of the interest rate landscape in Australia. But we're also finding that returns for super funds are decreasing somewhat, and also linked to that sort of being heavier on equities, super funds seem to be having a more higher preference for riskier assets. So we we're looking at that and thinking actually there's a really strong case here for an allocation to gold among super funds. That's why we produced the report. We have a dedicated sales team that operate globally who work with institutional asset owners and asset managers and institutional finance consultants to help them understand the gold market and navigate the gold market and understand the role would play in investment portfolio. Thankfully now borders are opening up, so we're looking forward to getting to Australia very soon to continue to make that case. But to support that, that's why we produced the research, because there is a strong case for an allocation to gold in Australia, just as there is in other markets around the world. I mean, it's a very liquid asset. Over $145 billion of gold is traded every single day, and doesn't have particularly strong correlations, particularly in a downturn, which is actually what you want. That means that it can be an effective portfolio diversifier. And taking all of that into account and looking at the returns, the average annual returns that gold can generate, means it can increase your risk-adjusted returns, which is what you want. And that's what the research is looking at. And it looks at it in the specific context of an Australian investment portfolio.
For anybody in Australia who is interested in that report, I'm actually going to provide a link to the World Gold Council report in the comments below this video. Now, you've raised some fantastic points today and topics and education things that the World Gold Council is taking on, and I look forward to seeing them. But I do want to finish with just one question today, and that is, what do you think is the one thing investors should know about gold?
There's lots of things. I think if I was to choose one thing, it would be don't be discouraged by the fact that gold doesn't generate an income. We found through talking to a lot of pension funds, for example, worldwide, they have income seeking mandates, and I understand that can be a barrier to investing in gold, because it doesn't provide an income. There's no coupon, if you like, or interest associated with gold, or a dividend associated with gold. But just look at its returns, especially historically. You'll find that if you look at 10-year, 20-year plus returns, gold does generate returns, and it does, despite the lack of income, it does outperform many other major asset classes. So it does have a strategic role to play in investment portfolio, even though it's not an income-bearing asset. So if I had to pick one thing, that would be the one thing I would take away, or like people to take away. If I have a bit of luxury, there's just one other thing, and that's to think about the diversity of demand for gold, because it's that makes gold such a unique asset. You don't have any other asset that is a central bank reserve asset that's used in jewelry, that's used in technology, and is an investment asset as well. These different areas of demand, they have very different drivers. They have very different economic cycles. And that means that gold just performs in a very, very different way to other asset classes. And because it performs differently, it means that it can be an effective portfolio diversifier. So I think just getting your head around the diversity of demand for gold, and realizing that uniqueness of demand is really what makes gold in itself unique, is really fundamental to understanding gold as an asset class.
Andrew, that is a fantastic place to close off on. Those are both two answers I've never heard before when I've asked that question. So thank you very much. Unfortunately, that's all we've got time for today. So we will need to leave our interview here. But I do want to thank you for your time. This has been a fantastic chat.
Thank you. Thanks very much, Shae.